Topic A tonight, gold touched $1,500 an ounce today. Then it pulled back slightly. It's a big headline issue that, to me, is not a positive omen. We're going to hear more on this in just a few moments. However, the good news, the Dow rose 65 points today. That after a 140-point drubbing yesterday. Did anyone say volatility? Commodity and energy stocks led the parade of winners. Meanwhile, housing starts jumped up a wee bit, but the basic pattern is flat, 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 nothing going on. And Intel reported super earnings after the bell, and the stock rose 5% in after-hours trading. IBM also beat, but the stock fell about 1.5% to 2% in moonlight trading. Tomorrow, we're going to get more results. We got Apple, AT&T, Wells Fargo, among many others. Now, I still fret the impending end of the Fed's QE2 pump priming may surprise investors with a stronger, not weaker dollar and an end to the so-called risk-on cyclical growth and commodities stock market rally. That is my fret. Let's see what our market pros have to say about it all. Here now is Stephen Abrams, Managing Director of Bryden Abrams Investment Management. We have Lee Munson, Chief Investment Officer at Portfolio, and Jordan Kimmel, Market Strategist at T3Live.com. Lee Munson, I fret that we may hear as early as next week on the Fed day, which is going to be Wednesday. They're going to signal loud and clear QE2 is coming to an end. The pump priming ends. And that, Lee, that could drive the dollar higher despite all the trades against it. And that, in turn, could knock the commodity, risk on trade, energy, commodities, industrials, everything that seems to depend on a cheaper dollar. What is your thought? Am I way off beam here?
No, Larry, I think you're right on. I think that that's what people have to think about. Everybody wants to talk about the long-term health of the economy. I'm not exactly here to argue about that because I don't think long-term. I have real clients that need money every month to live off of. If the dollar just bounces, it doesn't have to get into an uptrend. Larry, it doesn't have to be king again, but if it just makes a little bit of bump up, we're going to lose it in the commodity trade. We're going to lose it in oil. We're going to lose it in gold. And a lot of people who are long-term on this go commodities, they're going to get shaken out. Quite frankly, I think it's going to be a buying opportunity for those people who have a little dry powder. I would be very concerned. I think people are complacent. That's why we're long the VIX. Volatility, they're acting like nothing's going to happen next week.
All right, good stuff. You read my mind. Jordan Kimmel, you don't agree with me. Tell me why.
Well, you know what? It's not only risk on, risk off. I think you have to understand there's only two alternatives. One is to own, one is to lend. If you're not being paid anything to lend your money out, you can't achieve any long-term or even intermediate goals. It's a matter of ownership, so it's either owner of stock, owner of some income, owner of commodities.
But you could go defensive, Jordan. You could buy, if you look at the market pattern, not today. Today was a commodity day. But before today, defensive stocks like pharmaceuticals, healthcare, utilities, they were really doing better than the cyclical pro-commodity risk-on trade.
That's okay, though. That's the nature of the bull market and the rotation that comes in. The small stocks lead, commodities lead. It's okay for defensive stocks to lead. So I'm not saying I'm not storing gold and I'm not hoarding gold right here. The fact is, when you look at gold and you're looking for the short term, what's more bullish than a new high?
You know, Stephen Abrams, the Fed could put an end to the gold trade by ending QE2. I think people are in denial about the short run effects. If the Fed stops printing dollars, the value of the dollar might go up for a change. And that could slam gold way down, Stephen. That's on my mind. You tell me.
Well, it might happen that way, Larry. That's very possible. It'll really depend upon what happens to interest rates when the Fed phases out of QE2. First of all, I don't think they're going to quit it cold turkey. I think they'll continue to buy treasuries to meet the redemption. So they're going to phase out of it.
But that's pretty cold turkey. That's really not. That doesn't add any new money. That just keeps the level of debt the same.
Right. But remember also that all the reserves that they have pumped into the system through QE2 are still sitting on their balance sheet. They're not doing anybody any good because they're not getting lent out. Now, you probably will get a market correction when QE2 comes to an end.
Hold that thought.
It may happen.
Hold that thought, Stephen. Hold that thought. We're going to come back and talk about the possible correction and your investment picks. But before we do, two tech titans out with earnings after the bell today. Intel pops, IBM drops in late-day trading. Let's go to CNBC's own John Fort with the full story. John, start me off with Intel, which by all accounts, including my pal Dougie Cass, ass who does not like the market. Intel was a home run, John. Is that the case?
Absolutely. You don't get a surprise like this every day. With revenues coming in more than $1 billion above what the street expected. We're looking for 11.6. They gave us 12.8. We saw PC client revenues up 12% from Q4. Q4 is supposed to be the big quarter. Part of the story here is emerging markets. It's China and Brazil. Intel saying that firms like IDC would say the PC market is soft, are not able to count those emerging markets the way they should be. Yes, it's soft in the U.S. and Western Europe, not so much there. But enterprise also strong, servers also strong for Intel.
John, what happened to IBM? I know they beat, but the stock traded slightly lower, and people are taking some pot shots. They're saying, for example, their service contracts didn't come in as strong, and the outlook may not be as good. What you thinking?
Yeah, their signings were down a bit. IBM tried to sort of slough that off, but Tony Sacconaghi put the spotlight on it. Then IBM said, well, what you really need to look at is order backlog, which is actually quite healthy. Then some people also said, well, they brought their full year estimates up to $13.15 for EPS. Given their beat, they should have brought it up more. But, you know, IBM likes to manage these earnings pretty carefully. They're probably saving the good news for later is what I think. Got to remember, they're also near their highs, all-time highs, Larry.
All right, John Ford, thank you very much for those important updates. We're coming back. Stephen Abrams, Lee Munson, and Jordan Kimmel. Lee Munson, does this very good Intel number and moderately good IBM number, does this give a little booster to technology, which has kind of been lagging recently?
Well, absolutely. I mean, I love technology, but it was so overowned going into the beginning of the year. And then how am I going to own all this technology when all of my commodity and energy stocks simply go up? Now, recently, we've been long some of the technologies. I really like the NASDAQ. If we can get this correction that Stefan's talking about in the market once the Fed does, you know, take the money out of the system and people do realize that a dollar bounce is going to kill your 401k. So, by the way, next time the dollar goes up 3%, then tell me why your 401k is down 3%. And it's because of that big commodity market. When we're talking about sector rotation with the other guests, I think technology is a place where you can find some real value. I've been looking at Intel. I think IBM's kind of old news now after the earnings. But I think it shows you that there is some growth. But it's not going to be in the energy. It's not going to be in the commodities until we're done with this dollar bounce that could occur within the next 2 to 4 weeks.
Which could be one of the big surprises. I think you're exactly right. Not everybody in the world
I don't think it's going to be a surprise, Larry. I think it's right there.
Stephen
I'm not
Abrams,
trying to
hang on a second.
agree.
Let me go to
It's
Stephen. Stephen, you're looking for a correction. Very interesting. What is your investment strategy? What do you play if you're worried about a correction?
Well, first of all, let me make it very clear. I'm not that worried because this is one brick in the wall of worry that everybody is anticipating. So whatever brief correction we get, it will be just that, short and sweet. And I think to the extent that it gives you a chance to pick up some shares in technology, in companies that are going to serve the new emergence of natural gas as a fuel in this country, as it gives you a chance to pick up some of the global luxury brands that are now beginning to make real headway in the emerging markets. There's a host of opportunities here. The commodity cyclicals may take a rest for a while. I wouldn't argue with that.
All right, Jordan. All right. Hang on. Jordan Kimmel, you're not really in the correction camp. What is your investment strategy? What are you actually buying right now?
Okay, I'm buying lots of individual stocks, small cap, large cap, mid cap, all different sectors. All I look for,
Can you tell
Larry.
us a couple?
Sure.
We love names.
Well, Halliburton, right here. Crocs, actually, which was a big underperformer, breaking out right here. A lot of the names I'm interested in actually are in the 300, 500, 800 million market cap. IDT is a name that's on my model right now.
Do they get hurt if the dollar goes up? I'm going to call it the Lee Munson dollar, a.k.a. King dollar.
Well, you know what? I think that Lee's point was actually on is that what you need to look at is companies that are supporting all the global build-out, which will not stop. So I don't own a whole lot of commodities. I do own a little silver, keeps going higher. The reality is I'm very stock-specific, revenue growth, margin acceleration. I call them magnet stocks. They're coming in all flavors. What you don't have is any downside leadership now.
All right, no downside leadership. Lee Munson, if the dollar goes up, and if it goes up because the Fed is starting to print fewer dollars, and if the shorts on the dollar are covered, everybody's short the dollar, what does that do to gold? Could gold be headed for a real crack here?
I think it's going to head for a real crack. The uptrend in gold is unbelievable. Now, I don't want to be short gold today, but I'll tell you one thing. If people start to run the hills and start to realize there's real money to be made, I think people are going to understand that, gold, it is not worth anything. I think that we could see it go from 1,500. I think it could go all the way down to 1,200, to 1,100. It's in the cards. I think people have to start to realize, what is it? It sits there because the Fed has kept rates too low. If we start having a natural rise in rates, we don't need a 10-year Treasury to be 10%. We just need to be, a couple percent higher than it is.
It may be,
I think people will see the futility.
Just one other thought. It may be gold is where it is because it thinks the U.S. government is going bankrupt, and that's going to drag the U.S. down.
Well, that's the point, Larry.
I don't think it's going to be bankrupt. I think there's a bunch of complacency, and you can see it in the VIX right now. You can see complacency. People think nothing bad's going to happen. And by the way, the gold is not some defensive play. There's just as many degenerate speculators, traders, people like myself that love to buy gold. It's not getting out of the risk trade. Gold is just another momentum stock like anything else.
What were you going to say? I'm going to give you the last word, Stephen Abrams.
I'm going to say that the thing that will kill gold, if it comes to pass, will be some fiscal responsibility in this country.
Is such a thing possible in my lifetime, Stephen Abrams?
I wouldn't bet on it.
All right, Stephen Abrams.
I'll be your age, Larry.
Lee, Munson, and Jordan Kimmel, we're all going to live a long time.